Good evening and welcome to The Square. Tonight is a very interesting and informative conversation that is going to focus on the financial leasing model in Rwanda, the financial leasing landscape in Rwanda, and we're going to look at, we're going to examine the current model as well as how private sector businesses are incorporating leasing as a business model in their operations. And joining us to shed more light on this topic, we have with us Serge Kamuhinda, the CEO of Volkswagen Mobility Solutions in Rwanda. Serge, it's a great honor to have you on The Square.
Great to be with you.
Great. And also from a policy perspective, to shed more light on the financial leasing landscape in Rwanda, we have with us Eric Rwigamba, who is the Director General of Financial Services at the Ministry of Planning, the Ministry of Finance and Economic Planning. Eric, great to have you on The Square.
Thank you so much.
Great. My name is Dan MPC, host of The Square. As always, I'm joined by The Square resident panelists, Charles Haber, resident panelist of The Square. Great to have you on the show.
Same here, Diana. How are you?
Good.
Good.
We're also usually joined by Brenna Namata, who is not with us today, but I'm sure she's going to be following the show and commenting as well on her social media from wherever she is. So before we kick off, like we always do on The Square, we have midweek highlights that The Square resident panelists share with us. Charles, I know there's a lot on your mind that you'd like to share with the viewers before the show kicks off. A lot's been happening this week.
So, of course, as you said, there's quite a number of issues I want to share. But one thing that came into my mind was the Pan-African organization this year had a theme around silencing the guns. And it's basically around conflict resolution in a quiet, modest way. Now, just in case you thought Ethiopia with the war in Tigray was enough, you didn't expect that in Kinshasa people would be throwing chairs and furniture at one another. You didn't expect that in Kampala next door, you know, all that chaos is going on. So now I asked myself that, do we have to be extremely physical? And it just reminds me of my primary school days that when I was in primary school, we had a football field where football used to be played. Mm-hmm. We also had a place called the Old Field, mm-hmm, where everybody who wanted to fight, teachers against teachers, students against students, girls against girls, girls against boys would go and fight. So does that necessarily mean that we are bewitched to be a physical society as Africans? It's extremely painful that the only way in which we express our anger and vet, whether at the smallest level of the village level, you know, or at a very corporate level or at a continental level, is by being physical.
Physical violence.
Yes, yes. It's so, how are we silencing the guns? And even it gets even more painful when the media is reporting people in a hospital. In Massacre, there was a story in the media of doctors going physical. So I'm pained by us getting physical.
I hear you. And I know this is something we've discussed on the show, especially last year when the Silencing the Guns, this theme or this campaign continentally came out. I think it's something worth discussing. I, for one, I'm usually an eternal optimist. But when it comes to the whole silencing the guns and countries coming together, I get extremely pessimistic.
Yes.
And it's a pity that a lot of countries across the continent have to resort to violence, you know, in setting the agenda for governance and that sort of thing. But definitely, I think it's something worth discussing on the show.
Over and over.
Over and over. Yes, so thank you.
Until the guns are silenced.
Until the guns are silent. Thank you once again to our viewers for tuning in. Please, as we carry on with the show, keep your comments coming on our social media feed using hashtag #TheSquareRW, as you can see on your screens. And I will now get back to our guests. Serge, great to have you. I know we've wanted to have you on the show for a long time, so we finally got lucky today and had you. Eric, on behalf of the ministry, thank you so much for accepting our invitation. This is a topic personally I am excited about because I think I have a lot to learn. I know, Charles, you're a bit more conversant with the Square resident panelists than the Square resident panelists on this topic. So financial leasing in Rwanda, you know, and I want to just kick off by understanding it in terms of just what it means and just understanding the landscape in Rwanda. And if you'll allow me to read to our viewers, technically defined, a finance lease is a type of lease in which a finance company is typically the legal owner of the asset for the duration of the lease, while the lessee not only has operating control over the asset, but also shares some of the economic risks and returns from the change over the asset, and also the valuation of the underlying asset. And I think what I'm particularly interested about is the ownership of the asset over a period of time. And this is usually for things such as vehicles, equipment, to enable businesses to actually grow their operations. So I want to kick off, but also from a policy perspective, to Eric. If you can share details with the current financial lease model in Rwanda, just to start off the conversation.
Right. Thank you so much, Dana, and it's a pleasure to be with you on the show. I think to understand the financial lease landscape in Rwanda, it is very helpful that we pick it from where it started. So in 2005, that's when the first law on leasing was enacted. It gave some good of mileage between 2005 and 2010. Many banks and operating companies started offering leasing to many users. But that law had some issues to do with the treatment of depreciation, to do with the treatment of VAT, the secondary market issues, registration. And so that triggered a discussion led by the government in 2015 to amend that law. And that happened, and it was very deep and through very consultative meetings and input. So the law we have today provides really a very good legal framework, and the regulators at Central Bank for banks and MFIs and other operators. And that focused more on the finance lease. But just to remember that we have the finances, but also operating lease. So the operating lease for it has been in the market, and it's doing pretty fast, very well. So where we are, in summary, we have the legal framework that's very robust enough, because we did a lot of consultation with the global practices. But also, sorry, and the regulations are in place. You can today offer leasing in Rwanda, even if you are not a bank or a microfinance institution or a SACCO. You just need, I think, about 150 million share capital, minimum share capital. So the environment is now ready. Now, because some service providers like banks had hit some bit of challenges between 2010 to 2015, then some banks decided to find other ways of offering leasing through asset financing. So where we are now, a few banks are doing leasing. BDF does it very well. And there's so many microfinance institutions offering finance lease, which means that for the big tickets, the banks are financing, and other companies, by the way. They are offering both finance lease and the operating lease. For micro and SME, mainly we are now focusing. We get those services from BDF and a number of microfinance institutions. And what is financed through leasing, there are quite a number of assets. The list is very long, so motorcycles, processing equipment, farm equipment, vehicles, trucks. So a number of them are being financed through leasing.
Thank you very much, Eric. And I know, from some of the reports that we're reading before we started the show in 2013, there was a bit of a sort of hassle between people who, were getting these leases stating there was a sort of misunderstanding between, you know, the tax collector, whether it's RRA. There's also an issue between banks. There were, you know, charges on taxes, there were charges and the fees on the lease. And a lot of customers or consumers of these leases, you know, SMEs and businesses really came across, and I think this was even escalated to various ministries to look into the matter. This was in 2013. We are now in 2020. Have some of these big issues been ironed out, especially when it comes to SMEs? Because at the very core, the intention of leasing is to enable companies to grow their operations. So have some of these issues been ironed out as we stand right now in 2020?
Yes. Actually, what triggered the amendment of the law in 2015 was to address those issues. So one was the treatment of VAT. Without boring the viewers, what to mean when you have a lease, when you acquire an asset through finance lease, every month you get an invoice, and that invoice carries a VAT component. Now, for the lessor, for the companies, banks, and MFIs, and the leasing company that were offering leasing, even when they issue an invoice, even when they have not collected the payment from the consumer or the lessee, he would have to declare to submit a return to remit the amount collected, would be collected, but which not collected. So in which case the lessor is suffering from, he didn't get back his capital, he didn't get his interest income, he didn't get, and then he's paying the VAT. So that was the big issue. So that has been sorted in the current law. The other issue was treatment of depreciation. There was a bit of a discussion, should it be in the books of the leasing company or the lessor or the bank, or should it be in the books of the customer who is the lessee? And that has been also sorted. So a number of issues have been addressed, but because banks were, I think, a bit scared, they are still slow in terms of picking up with that product. They are serving the market through asset financing, which is not the best model that you want, because what we wanted at the government is widen the range of services through which a business person should be able to access a productive asset. So, but I think gradually we are getting there. But I think where we're happy now for MFIs, for SMEs and micro leasing is doing very well through BDF, through MFIs, through SACCOs. And on operating lease for vehicles, trucks, equipment, they're also quite very well. So the issues have been sorted out, but I think we need to do a bit of more awareness, working with the banks and other leasing companies, and to keep on engaging. If there are other still outstanding issues, then we should look at it. I think one to pick on very fast, which I know, registration of the movable assets or leased assets is still a challenge at RDB, because the development of the digital register is being finalized. So that's, I think, one issue that we are still we are following up to make sure that is closed.
Thank you very much, Eric. And I'm glad you talked about awareness, because you know, one of the things we're going to discuss is the awareness. Are Rwandans aware about this alternative financing model, you know, leasing as an alternative to, you know, traditional loans? The awareness, the benefits for companies and for Rwandans at large. So I'm glad that you mentioned more efforts need to be put into awareness of this. Charles, I know this is something that you hold close to your heart. This is a topic that I think you deal with on a regular. What are your thoughts on not only what Eric said, but also on the leasing landscape in general in Rwanda?
You know, when you listen to a government official, you can think, you know, they've done everything that they can, and probably they have. But you see, from a business perspective, we always have to look at things in two different ways. It's either that you sell quantity or you sell quality. If you sell quantity, you drop your margin and you sell volume. If you sell quality, you raise your margin and you sell to the few. So we are with Serge on the show. The margin that he's going to make on a Terramont is not the margin that he's going to make on a Polo. If you're Toyota, the margins that you're going to make on a Land Cruiser is on the margins that you're going to make per unit on a Corolla. And that really is where the crux of the matter is, that It's very, very easy, and I'll just take it from what Eric said, and thank you, Diana, for choosing Eric as a panelist, because his background is he actually worked in a company before government stole him from that private business. He worked in a company that had a leasing product as one of their core businesses. So the fundamentals that are not making leasing successful in Rwanda have not been addressed, largely because of those two issues that I've mentioned: quality and quantity. And and I'll start with the easier one, which is quantity. We do not have the numbers in Rwanda, and you cannot run away from this fact. Serge cannot sell 100 polos in a month in this country. It's very difficult for him, almost next to impossible. If you go to Akagera business,
and
yes.
You're talking about quantity.
Quantity.
The numbers, yes.
Yeah, numbers. So what option does he have? Is to go to quality. And the reason why, the reason why he has to go to quality is around the reason that Eric has raised, that the bottlenecks along the way, VAT, ownership of the asset, depreciation of the asset, all those will have a bearing on the cost of how much VW, LG that sells screens, Samsung that sells fridges, and so on and so forth. Whoever is selling whatever they are selling, they will factor, or the banks for that matter, they'll put in, the moment it's more difficult for them, they will not say we're not going to do that business. They just put a price to it. Ultimately, it will become more expensive for you and I. Now, unfortunately, because from a policy perspective, that is Ministry of Finance, from an end user perspective, which is Rwanda Revenue Authority, as long as there's a transaction made, they'll say, where is the problem? We have done a deal. Somebody has paid their tax. They do not appreciate the end user. And that's actually where we should have, maybe that's the role that you and I will have to play on this show, that it's going to be very expensive for us, but we need the likes of VW and whoever else is there in the market to be able to sell as many products as they have, because it is extremely affordable, because all the expenses along the value chain have been addressed. Now, I'm going to challenge Eric to say, yes, in his own words, these things have been addressed. But let's take it a notch higher and say we move from 100 leases, for argument's sake, to 1,000 leases. The easier it is for people to be able to afford screens, chairs, fridges, cars, Jim, and so on.
Right now in my mind, I'm thinking of equipment.
Yes, whatever you can think about. Yeah. I don't want to talk about houses, because that will be a bit more complex. Yeah. But the easier it is, the more we will be able to turn it around. Because leasing, and I think it's at the back of Sarah's mind, that it's purely volume based. Yeah.
Serge, this is a lot that we're expecting to hear from you. VW is a company in Rwanda, Volkswagen Mobility Solutions, that you're the CEO of, amongst other aspects of VW that you also head. You know, before you came into the show, we were really interested to hear of a private sector institution in the country, in Rwanda, that is big on the leasing model. So VW is a mobility solutions company, so you're in the automotive industry. What is the leasing model that you have? What is the leasing model that you are offering to customers in terms of the cars and the services that your company provides?
Yeah, thank you. So people want to have access to lease so that they can have a new asset, in that matter, a new car, and that they can operate it directly without necessarily owning it. So when VW started to come on the market, we realized immediately that not everyone was going to acquire a new asset and a new car. And so we created another company, Mobility Solutions, that was supposed to facilitate people to use a new car without necessarily owning it. So we actually provide operating lease for individuals and customers, and corporates, sorry. And we are able to provide different type of vehicles. And we still remain with the ownership of the car. We maintain the car at our facility, state of the art, and people are then allowed to use the car as they wish, per day, per month, or per years.
So first, wait, I'm going to ask questions like a layperson.
Sure.
On behalf of the viewers who, I'm sure like me, really want to break it down and understand this whole leasing model. So basically, I come to VW, I say I want to buy this Passat, but instead of buying it directly, I will get it through a lease model that you're going to give me, and the car will be maintained and maintained at your facility. Is that what you're saying?
So you can come and you have the, if you have the ability, you can buy it directly from the showroom.
If I don't have the ability to buy it,
if you don't have the ability,
yes,
you can walk away with the car still, decide for which period you want to drive the car. It can be one day, it can be a month, it can be years. And then we will charge you per month an amount that enables us to give you the car, to insure it, and to maintain it. So you don't need to own the car. So we have, for example, business people in town who travel a lot. And they say, I don't need to have my own car if I am not in the country 4 months. Yeah. And so they use the car for 6 months, and then they give it back. They come back and they take it. The same for companies, and the same for other individuals who find it better to say, I'm going to pay a price per month, and I'm going not to constrain my whole capital to acquire the car. And this we are able to do because we have a competitive advantage. We have a direct link to the assembler and to the manufacturer, the original equipment manufacturer, the OEM. And we transfer that benefit in terms of cheaper access to those cars to the customer. And that has proven to be a good model. And moving forward, if you look at the car industry, it's going to be even more necessary. And this is a trend you can see even abroad, where they don't have a problem of access to finance, where the cars are being a service and not just as a product to own. Mobility as a service. We now have, we are entering the era of electric vehicles, and electric vehicles are much more expensive right now than vehicles that are run based on fuel. And that is why we also have introduced electric vehicles, and they are running now in town. We own them, and we are incurring the risk of owning them, but we allow people to use them. However, I think there is a confusion a lot of times between leasing and a loan for a car.
But what you just described is leasing.
Is leasing,
exactly.
Yes. Yeah.
Yes.
And so people sometimes they say, oh, I want to be able to own the car and pay some installments at the end of the month, and then I will be owning the car. But that is then a loan product. And the reason why the loans are expensive in Rwanda, in Africa in general, is because there are high interest rates. Yes. And the high interest rates, the reason why there are high interest rates, I think in Rwanda we can focus just on one factor. It is because we don't have enough savings. And the reason why I don't have enough savings is that there are not good enough jobs. For example, jobs you find in the manufacturing sector. That's why it is very important that the automotive sector in Africa comes out of the ground due to the CFTA, to the new trade area, because people will be able to have good jobs and have a disposable income, have more savings. But there's also, and that is more on the demand side, there's also a problem on the supply side. There are not enough savings products. And many people, when they have a disposable income, prefer to save by owning land. But now it is changing because the government is taxing land a bit more heavier. And I think with the Kigali Finance Center, we are going to see a situation whereby we have more products. For example, I hear there is an idea to have city bonds based on property tax. And the mere fact that you have a finance center here, you have more financial liquidity in the market and people can use this cash. When people save in land, other people cannot use that money. And so I think that is a good evolution. But I don't want to put everything on the banking sector. As an industry, we see that it is a challenge, and we know that whatever the car industry has flourished, 80% of the cars are pre-financed, are financed through banks. So what we are proposing is to say, if we are going ahead with an automotive industry and have made in Africa cars, we are mobilizing financing internationally so that this financing can...
Sorry, when you say we?
As an automotive...
Okay, the industry in general.
Correct. Okay. So we have an association called the African Association of Automotive Manufacturers, but even us as Volkswagen, we are mobilizing funds so that people can own cars that are made locally at a cheaper rate. It's not going to happen overnight, but it is in the pipeline. And the reason why we're able to do it is because we are not just driving consumption for the sake of it, but we are driving consumption for the sake of industrialization. And also to remember that whenever people don't have means to acquire a new asset, they acquire used cars. And used cars are polluting. In Kigali, we have a problem of air pollution. And it's also a way to outsource jobs. You get cars that were depreciated fully elsewhere. You have created jobs elsewhere. And you get cars that are not going to be able to also have enough resale value for the bank to trust you, that they can give you a credit because they know the car is not going to have a lot of time to operate.
Yeah, that's very informative. I'll definitely come back to the Volkswagen leasing model, not only as the questions come in, but as the conversation comes through. Eric, I want you to respond to some of the questions Charles challenged you with regarding some of the issues that are still there in Rwanda in the leasing, finance leasing landscape in the country. Would you care to just quickly comment on some of the points that Charles raised?
Yep, right. I think I totally agree with Charles. And the issues Charles is raising are not only related or concerned with the leasing. It's actually some of the principles governing business, any profitable business. So volume plays a very key role in any business. And for leasing, in particular, it's more critical because it's a new model in Rwanda, and because new, the consumers are not very familiar with it, but also the service providers are not familiar with it, meaning that naturally, most people will go for what they are familiar with, which is basically loans or credit. And so the question becomes, then how do we address the issue Charles is raising? Because that determines whether or not the model of leasing in Rwanda will be profitable. And if it's not profitable, then either the final consumer will pay the price or they actually just exit. Now, there are two ways of looking at it. I think one, within the framework of the Kigali International Finance Center, we want more people who can come and operate from here targeting the market, the local market, but also opening into the region and Africa. Meaning that it is, for example, the VW services, they can start operating in Rwanda. They are operating in Rwanda, but they should be targeting our local market and beyond. Now, through leasing or through other models. If that happens, then the issue of volume will be addressed. But how do they then make that happen? And that's why the government really made all the effort to establish the Chicago International Financial Center, which offers very many incentives for operators who want to operate from here, but serving our local market, but also beyond. So that is one way of looking at it, because our market will grow, but it will take time. But for business, every day counts. So I think until when we start thinking more beyond our boundaries, that probably some of these models will be more viable. The other way of looking at it, especially which concerns us as the government of Rwanda, is using leasing models as ways of providing an opportunity for young people, women, entrepreneurs, promoters, to get access to finance for productive assets. But that's what creates jobs. That's what creates income and grow our tax base. So the issue of, for example, let me pick on practical examples. There are players in the market that have been targeting users of machineries, leather machinery, wood machinery, the wedding, those small kind of equipment, which in every market, the young people leaving the vocational trainings, they come with skills, but they don't have the assets like to offer as a collateral to access that kit to create an employment for himself or herself. Now, in welding, in drivers, those are very key components of the economy. So I'm moving away from the big markets, especially who are focusing on operating lease, like Saraj were talking about. Very fantastic. But how do we widen the menu in terms of services that can be made available for users? We are talking about if people wanted to set up a medical laboratory and you don't have collateral to go and get a loan to finance them, can we acquire those equipment through leasing? A restaurant, a laundry. So that is, if you want to broaden the model, that's what we are looking at. And you remember at the time when the government laid off some of the drivers and changed the model, many of the drivers, what they did was to go to get vehicles, own their vehicles through leasing, and their lives continue to be even better. So that is how we should be looking at it. No, so for providers of leasing, I think it is you can grow volume, either target different segments of the economy, or draw your attention beyond the boundaries of Rwanda. And I think both models have been tested in many countries, and I think we are better placed to do that, to play in that space.
Serge, is this something that you see realistically happening like soon?
Yes. So
in the next 5 years at least?
Absolutely. From our experience, something that goes a bit beyond is a sector-specific knowledge. So we are able to offer these models because we know the car industry very well. So we are focusing on cars, and we know how to maintain them. We know the life cycle of a vehicle. We get better access to spare parts. So I think something that can be done is to find leasing with operators that know a sector very well. But I think there's also an elephant in the room about banks. You know,
I think the next time we have this discussion, because it's a chunky discussion, we need to have it in different segments. We'll definitely have the banking sector represented.
Yes, because I was reading, according to The Economist, African banks are actually the most profitable. If you look at the return on equity for African banks, it's on average 17%. And when you look elsewhere, in Rwanda actually, some banks are at 19%. And in other countries with mature financial markets, you can dream of 11%. If you look at the big bank like JP Morgan, they get 14% return on equity. So, but in Rwanda, we are at 17, 19. So banks have to be a bit more brave in venturing in industry-specific financial products to enable access to productive assets. But our experience has shown that it is very important to look at the business model as well, not just to provide the asset. For example, we are now inquiring mobility in rural areas. And we find out that in rural areas, there is need to move people, but to move goods, but also to move people. And we are trying to inquire the usability of a tractor based on electricity. And we find that it's not enough to have a tractor. That tractor has to do some post-harvest handling so that you can increase the shelf life of the harvest. And only then you will have more money into the hands of farmer, and only then can they afford to have such an asset. So the same is true for vehicles. When we give vehicles, for example, when we give electric vehicles now, you can move to Timirongo, to the city, at a flat rate. We have to invest in charging stations. We have to invest in the repairs. And it's only then that it makes sense that someone may later own an electric vehicle, because there's an ecosystem and
around to ensure that happens.
Correct.
Yeah.
So the policy also has to come, and we are eagerly waiting for the e-mobility policy, because it's only then that financing can also make sense.
Thank you very much. Charles?
So the easiest guys to punch are usually the banks.
Yes.
Eric and I come from a banking background, and we know how difficult it can be to blame a bank. No, so I'll give two practical examples in regards to leasing. So the regulation around collaterals requires that you can only make a provision of up to 50% of a collateral. I know there's an issue around IFRS 4 and where banks are trying to struggle to ensure that they do not make a provision of up to 100%. So what that means in layman's terms is that if I give you 50 million francs for a loan, in my books, I have to assume that you will not pay 50 million francs. Now, today, when it comes to collateral for a loan, you have to make a provision for up to 50 million francs. I mean 50%.
50%, yeah.
Eric, correct me where I go wrong. Now, what that means is that the bank, when it comes to leasing, it has to finance you up to 100%.
When it comes to leasing?
Yes.
Okay.
Yet, as far as the collateral is concerned, they have to make a provision of 50%. So assume Serge's VW Passat is 30 million francs. I will assume, I will discount it by 50%. In my books of accounts, it is 15 million francs. But I will give Blue Oceans the vehicle, I will secure that loan of up to the full amount of 30 million francs. I'll take it even a notch higher. When you when you look around at all the telecoms, the breweries and what have you, the guys that all of you guys give cars, you ask yourself, all these, whether it is Victoria Motors or VW Rwanda, they have to give extra collateral to the banks, even though MTN or Tigo or Skoll has shown VW a contract of the full amount. Reason being, they still have to discount that asset by about 50%. Now, I'm trying to explain this in very simplistic terms, but and I think Serge is the one who said it earlier on, that in as long as it's expensive for everyone, no, it's actually Eric who said it, in as long as it's expensive for everybody along the chain, they'll just add.
Keep on, you know, increasing
the point really I'm raising is that we have to look at the entire ecosystem, and those are some of the areas where that are still grey. Now, that said, does that mean that there's no opportunity? Definitely not. It basically means that because you and I and all the corporates in this town, and giving an example like Serge talked about the agriculture sector, if my business is tea or growing potatoes, why should I invest in machinery and tie down my capital?
Exactly.
I would rather, if VW or JCB or Caterpillar or whoever it is has that equipment and they have a facility for me, I pay them a rental, and if possible, if it can even be a percentage of my revenue, well and good. In the absence of that, I will sell you my potatoes and tomatoes that I grow at a more expensive price, and ultimately either export them or give them to us give them to the local market at a more expensive price. And I believe for Eric, and I really sort of want to sum up my point on this point, that at the policy level, that is where they really come in, to sort of look at this holistic view that revenue has their valid points around VAT and collection at every point of invoicing.
Yes.
The guy who owns the equipment has his valid point that I have sold my unit and therefore I should be paid for my unit. The leasing company is saying that I have not been fully paid and I have to mitigate my risk. The only way I'm going to mitigate my risk is the point that Serge was saying, is by the bank coming in to be a partner in me. So understand the complexity of those matters, address the tax issues thereof, so that it's affordable for everybody.
Absolutely.
Yeah.
We're getting towards the end of the show, and I would like to ask, the last point of discussion. Personally, and also on behalf of the viewers, I'm asking this question. I would like to know how it's done in other countries. And I'm not talking about, Europe or the West in general, but just other countries across the continent where this model, of leasing works, for easing capital, easing access to capital equipment for companies. What are some best practices that some of whether it's our neighbors or our sister countries across the continent, adapt in ensuring leasing is something that enables SMEs especially to really grow their operations and acquire capital equipment? What are some best practices that we can borrow, and what do you think needs to be done to really accelerate this model in Rwanda for it to really enable companies to grow? And Eric, just very briefly, I'd like to hear your points. Over to Serge before we go to a social media feed.
Yeah, I think both Charles and Serge touched on the ecosystem. And in that ecosystem, let me mention another elephant in the room, the secondary market, what you call the secondary market. If you repossess an asset from the owner that was not paying due to any reason, what do you do with it if you're a leasing company or you're a bank? So that's part of the ecosystem. There's another issue that is very important, after sales service. So maintenance, servicing, spare parts, and all other kind of things. For VW Rwanda, if the car is not working, they can even get some parts and put on another vehicle, or refurbish it or sell it. So they have a lot to do, but also they have the technical know-how. So as a government, what we are trying to do is create an environment within which the ecosystem has got the incentives, the point you are talking about. For example, let me pick on quick examples. If you want to go into the agriculture space, so many equipment for production, for drying, for storage, for cooling, for whatever. Now, if today you are a user and you go to any market and bring it here, and you don't know what will happen with that machine if it breaks or where to get the parts, you've actually done probably, you've created more problem than solving a problem. So what the government is trying to do is, through the Kigali International Financial Center, is to attract more of the VW models and more bigger players that would come here, set up, for argument case, Caterpillar a subsidiary, whereby all the tractors, all the other farm equipment are sourced from them, and then whoever wants to lease would get them from there, but you are sure you get the right brand, you are sure you get the parts, you get the maintenance and the servicing, and even and all that comes with that. And even when you are not able to use it or you are tired of it, then you can give it, get it back to the leasing company. So that is, I think, what the government is trying to do when you hear the Kigali International Financial Center, which touches on every sector has an angle with that. With that, then, this operation based in Rwanda, we serve the market, and why not serve the region, and why not serve Africa from here? So I think the issue of ecosystem being tied end to end is very important. And that also will address the issue of banks. So, you know, sometimes competition is good. Many markets where leasing has done very well, it's not necessarily offered by banks. It's actually offered by purely leasing companies that understand the business, the asset itself. So if we are, as we move forward, we are going to see more players coming here, and they are serving cooling systems to the continent. That's what we want to see. It will drive the issue of ecosystem. It will drive the issue of volumes. It will also help to give jobs to our young people. So that is, I think, how we should be looking at it. Now, at the government, what we need is to have a dialogue. What do you need in terms of incentives, in terms of laws, in terms of regulations? How do we protect your investment in the country? So that discussion is happening. What we need, more people on the table so that we can have that constructive dialogue.
Thank you very much,
If,
Eric.
if I can
looks, you know, from just listening to it, it looks really promising. I think we definitely, I know we've been wanting to have the KFC, Kigali International Finance Center on the square, just to also understand more what they do. But Eric, I think you've shed some more light based on the topic tonight of financial leasing. And thank you very much for you know, informatively just sharing your views, but also giving us a proper understanding of what's happening on the ground from a policy perspective. Charles, very quickly before we go to social media.
Thank you so much. Sorry to interrupt, but
no problem.
Eric just tickled my mind around the importance of everybody doing their job, as they say in French, chacun avec son boulot. Now, I am 100% sure, and I stand to be corrected, Serge, VW is not going into the leasing space or Victoria Motors or Toyota or all these other guys because it is their wish. It is because they are addressing a gap. So there is an opportunity, and then you cover that gap. If there would be a leasing company that can buy your entire stock and then lease those units to everybody who matters, it would be a win-win for everybody. And thank you so much for Eric for bringing that up. That the enabling environment for leasing companies, you know, can you imagine medical equipment? Why is it that you should wake up in the morning and you only have 2 MRIs in this country, or CT scans or echography machines, you know, like in the medical imaging space? So if you're like Philips, why should Philips medical imaging be in the leasing space? That's not their business. Their business is to sell medical imaging equipment, and so on and so forth. LG and Samsung and whoever is in that space. So the real opportunity in KIFC is around such instruments. But then again, goes back to Eric, that for these leasing companies to exist, the enabling environment has to be created so that the likes of Serge and all the others in that space do not have to think out of the box to increase their sales.
Absolutely.
Yes.
We're going to just quickly go to a social media feed. There are a couple of tweets that have come in that I'd like to read to our viewers. So the first tweet is from Lucy Babazi, if you can have that on the screens. At Serge Kamuhinda, it's great to know about a car leasing model from VW Rwanda. I'm familiar with #winning. I think that's probably going to be one of your many customers queuing up on the line for this leasing model that you told us about in your automobiles. We also have another tweet from Lucy saying people are saving, but not in banks. Majority prefer VSLAs, which I think is Village Saving Loan Associations, which are easiest and most accessible. Additionally, cash remains king in doing business. Digitize cash, wages, and village savings loan associations. Interest rates shall become competitive. Absolutely, and I think this is what we're talking about, which is why we need the banking sector here. Charles, I think if you agree with me, the next time we have this conversation. We also have another tweet coming in from Maureen, and she states that it's important to note that in countries where specialized leasing companies succeed, they usually finance their fixed assets through leasing and have more successful leasing industries, which is good for small businesses that rely more on leasing for their financing than big companies. We've come towards the end of the show. Time goes by so quickly when you're having these type of discussions. I would like us to just hear closing remarks from our guests as briefly as you can, Serge and Eric, but just in your closing remarks, what do you envision for the future of financial leasing in Rwanda, and what are your expectations? Quickly over to you, Serge.
Sure. So there are fundamentals that are being addressed now and that we should continue addressing, but in the short term, while those fundamentals are being addressed, such as through the Kigali Finance Center, we as business are also going to innovate and think out of the box and find ways where we still can have accessible products. And so what we are doing at VW is to, yes, sell new cars, make those new cars available, and after 2-3 years maximum, sell those cars. They are still cheaper and almost new, and renew our car fleet so that at the end we can renew the car fleet of the country. And I guess what we also bring on the table, and something to learn from on the long term, is the sector-specific knowledge, the asset-specific knowledge. Like Andrew said, it helps in managing the risks while we are going to wait a bit until we have strong leasing specialized companies.
Absolutely. Eric, over to you. Closing remarks, and of course you'll be talking here on behalf of Government of Rwanda. What can we expect in terms of how this model, the financial leasing model in landscape in Rwanda, can be made more accessible to companies, especially SMEs, to really drive the industrial sector forward in Rwanda?
Yeah, I think for us, what is key is continue having the dialogue to see if there are any barriers in the market. They are addressed together with the old actors in the market. And for the private sector players, for them, they are always alert. When there's an opportunity, they would tap into it. But I think the long plan for the leasing would be, if you have VW model for vehicles for transport and very comfortable, beautiful model products, how I wish a studio equipment like this would be through leasing. We have had people who have gone through the training on how to use this equipment, young, sharp, intelligent people, but they come out, they don't have collateral to offer to acquire them, but they have the knowledge and they have to feed their families. And so if we have more players, and that's what the government is trying to do, tell us what we should do more to get more people players in the agriculture sector, in IT. I need to set up a laboratory for some team of doctors that want to put up a beautiful laboratory. How can they work with the suppliers of this equipment in the video, in the laboratories, in agriculture, in energy? Already energy is happening for solar panels. They are doing that model, leasing of the panels to people and paying. So that's for us how we look at it. It's quite an opportunity, but I think it has to unlock it, we have to do two things. One, keep on improving on the environment. And then two, keep on attracting bigger players that come with what Serge said, the skills, the knowledge of how to use these assets, how to maintain them, how to service them. And that's where the opportunity is for jobs for our young people.
Thank you very much, Eric. I can clearly tell you're passionate about this topic, and I think you've beautifully and very eloquently explained it to us, to the viewers, to lay people like me who are not conversant with this topic. Thank you very much, Eric. I'd also like to thank you, Serge. Charles, I know you want to say something very quickly.
Yes, I really want to say something.
I can read you.
Everything has to be localized and, in this context, Rwandanized. One of the things that is at the bottom of every Rwandan's heart is owning. I wish I could walk away and own this mug. So the strength of the leasing platform is around creating lease to own products. Absolutely. So whatever legal environment, whatever financial environment has to think about the asset, whether it's, I know on the show we've concentrated so much on movable products, cars and what have you, screens and electronics and what have you. But even if it's a house or the equipment that Eric was talking about, or medical imaging for a hospital and what have you, is that it's very, very close to every Rwandan's heart, business or individual, to actually own your own thing. So the legal and financial environment has to be centralized and organized around ultimately owning the facility.
I think the end game or the option, there should be an option of, you know, at the end of the day, there's ownership of these assets. Thank you very much once again to you, Serge. Charlie, it's always a pleasure to have you. Thank you very much to Eric. Very informative insights from you, from a policy perspective on behalf of government. I would like to just tell our viewers, we don't have enough time to read most of the tweets that are coming on our social media feed, but please keep them coming using #TheSquareRW. To our partners, Uzi Collections and Bourbon Coffee, thank you for always supporting The Square. For me, thank you for tuning in tonight. Have a good evening. See you again next week. Goodbye.